The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we found another solid day of green on the screen in the grain and oilseed trade. I'm starting to wonder, though, does this rally have enough legs to continue or not? What are we going to be watching here, especially as we get into the onslaught of harvest in the U.S. and more? We got a lot of factors to take a look at. Pleased to talk about them here today with Mike Zuzolo from Global Commodity Analytics joining us here on the show. Mike, good to talk to you again. Hope you had an awesome Labor Day weekend, sir. How are you?
I did, Jesse. Thank you. And I hope you had a great one as well. I know you've been at the Farm Progress, so I'm sure you were probably doing a lot of driving, me for personal reasons, you more for professional, I suspect.
Yeah, plenty of driving. I got my 70-mile-an-hour windshield view of the crops, and in most of the areas I went through looked pretty good. And I know that's going to be on the minds of a lot of folks here. Really, the next couple of weeks, Mike. I mean, the phones might get a little quieter as folks get into the combine and the tractor, or they might get busier if turn on the audio steer. Maybe they want to make some of them calls. I'm not sure, Mike.
Yeah, and in fact, that's already starting to happen. It's kind of the latter because of the rally that we're seeing and still wanting to get some crop sales underneath the clients that I work with, especially if they haven't gotten caught up in the old crop soybeans and new crop soybeans. Still quite a bit of that out there. Obviously not as much as we had back in July, Jesse, but in early August. But I think the key right now is what you said about the harvest ramping up. It's going to be a drier harvest and a drier September, so it's going to be a faster harvest. And clients in Kentucky are already cutting beans. One client called me today in north central Illinois. He's already seeing a neighbor running corn. Like you, I looked at a lot of crops from central Illinois to central Indiana and on south into southern Indiana and southern Illinois over the weekend, and was absolutely amazed and struck at how fast the crops, corn especially, had dried down in the 3 weeks since I'd been through most of those areas. And I suspect there'll be a lot running in both corn shelling and bean cutting by this coming weekend. So navigating that, I hope we can do some good with today's market talk and help producers navigate that.
Absolutely. We'll talk a little bit of weather later in the show. I want to start, though. We got some bearish things and some bullish things to kind of examine here. Let's start on the bear side. Some news out of China. Been hearing more news here as of late. I'll pull up a chart for us, China PMI. What is bearish about what we're getting out of China right now? Let's talk about this first, Mike.
Yeah, and since it's been a couple weeks for you and I, just to go back and kind of broad brush what we've talked about for many, many months is how do the corn and beans break free from a downward push to the price action all the way into the end of September, like we had with the bean-led decline in 2014. And that's really what it's always been about. How do we break free from that, or what takes us, into that price action? And, I had been on the record with you and others, Jesse, that I felt like China was really coming around. It wasn't like a 2015 through 2019 weak recessionary, deflationary mindset building, economy building in China. But the recent data, I just can't get around. And this green line that you see here is the Chinese manufacturing index, and it's 6 to almost 8 straight months below 50, which means that they continue to suffer in terms of contraction in their economy on the manufacturing side. And then if you look at the red line, which is the services industry, and both of these are the domestic demand of China, barely above 50 still after 6 months. And so the domestic demand is not coming back. The domestic consumer is not coming back. And some of the recent economic news that came out since late last week and again early this week would suggest their export market is starting to dry up as well. And so they're losing. Think of it as a jet that's trying to get across the Atlantic Ocean. You got two engines. You're losing both engines at this point, and you're about halfway across the Atlantic Ocean. And so I'm really getting nervous about China. And that was one of the biggest features to what was happening with the 2014 similarities and the possibility that we could decline all the way into the end of September until we got well into harvest. The other thing also related around China, and that was the trade side of the equation, and we can talk about that too.
Well, and thinking about that, interesting comment you mentioned. Maybe exports kind of drying up a little bit here. We've started to get some China business, particularly soybean sales from the U.S. to China. It was quiet on Wednesday's wire, but I'm hearing some more rumors. There might be some more business out there, but maybe just as it felt like we're getting things ramped up, maybe we're going to put the brakes on this. Mike, what do you think?
Yeah, I think that's a good way to frame it, Jesse, because what we needed to break free from 2014 was a wheat-led rally. How are you going to get a wheat-led rally? It's going to be from the currencies, and it's going to be from the investors. And that's exactly what's happened. Wednesday's an excellent example. Again, we had it on Friday before the holiday, Tuesday after the holiday, Wednesday now, a third day, trading day in a row that wheat led us higher in percentage terms and is breaking higher and higher and higher, especially the dollar against the ruble. And I'm jumping around a little bit here, but this chart shows you the ruble against the US dollar in red. So the ruble is now strengthening substantially at a 5-week high, in fact, against the dollar and up against a major trend line on a weekly basis. Look at how that soft red wheat and that ruble dollar price action has been. And the wheat has reacted very, very nicely to that without the crude oil market, without the copper. So what we talked about many, many months ago about the Russian demand, Russian supplies, all that had to do with the currencies and especially the Russian ruble. So that's why I think the wheat's really been able to take on the leadership mantle that it needed to take on. Now, if we go back and talk about the soybean market, and as you say, we're picking up more demand from China, but I really want to throw a flag out here on the 50-yard line and say, notice what China did this week in reaction to the Canadian EV battery tariff that they slapped on China for imports. And that EV battery increase on tariffs for Chinese EV electric vehicle batteries, China said, hey, you know what? We're going to do an anti-dumping probe on your canola. And that really sent shockwaves across the oilseed markets this week. In oilseeds, specifically the bean oil and the canola oil, leading the canola, the leading canola market down, and that then turning the soybean oil down as well. This, unfortunately, Jesse, the tariffs, the duties, the dumping probes, things like that, I'm sincerely worried that's going to become more the norm in international trade as we get into 2025, that deglobalization is real and it's happening, and agriculture is on the front lines. That has been countered by that demand you're talking about, but that again goes back to weather and currencies. And so we're back to the supply side, we're back to the weather as far as what's giving us those big rallies.
No, great points, and I'm, we'll jump around a little bit more here too, and I'm pulling up the charts here as we go on the video feed, Mike. Pull up the EU wheat versus the US SRW wheat futures, and you mentioned this wheat-led rally with some support from currencies, and we've been tracking the relationship between European values and US values as well here over the last several months. Are you starting to see any correlations more so here?
Yes, absolutely. And this goes back to the Russia tie and the ruble and the supplies in the Black Sea. And if you've never worked with me before, please, if you've listened or watched for the last several months, we've really tried to lay out the dominoes that needed to fall for us to get this counter seasonal rally. And those dominoes are falling pretty much as we thought. So this is original analysis I think can be beneficial to you and your farm or your ranch. And notice in this EU milling wheat price, which is the top bar, we've broken through that major trend line, downsloping resistance trend line that's been set off since those May highs were put in place for both Paris milling and U.S. soft red wheat. So we are breaking above. We do have now, with a weekly buy signal on the soft red wheat, a break above this trend line in the milling wheat in Paris, in the European Union wheat futures, and also the fact that after we came back from the really poor price action, 4-year plus lows in soft red wheat, we came into last week's trade, pre-holiday trade, and actually saw that soft red wheat close higher on the month after making a 4-year low. So all the indications I have at this point suggest we do have a wheat seasonal low in place, and that wheat seasonal low can help us go higher counter seasonally as long as we have the right things ticking as far as the currencies and what we've shown here today.
We are talking with Mike Zuzolo from Global Commodity Analytics here today on Market Talk. Mike, let's rope the weather in here a little bit, and I want to start with South American weather. I'm hearing a lot of talk about how dry it is in Argentina, southern Brazil, et cetera, as their planting windows are just starting to open up. I'm hearing some talk. Some Brazilian farmers have mentioned to some folks that, and as Argentinians as well, that we could see some big shifts in acreage here this year potentially. There's some things in South America I think we need to pay attention to. What are you seeing and hearing right now, Mike?
Yeah, without a doubt. And this is where, again, this would stack up to where the soybeans are probably going to be the leader to the downside still, because if we stay dry in both Brazil and Argentina, and Argentina has almost as bad a situation as Brazil does right now, but that middle part of the map where you see a lot of orange and then you see a blue spot in the middle of that province, that's Mato Grosso, and that's going to be almost half of your corn production just in that one province, 35, 45%. And obviously the second crop is the biggest percentage of the total crop. So like you say, we got time, but this is a 9-month drought severity. And you notice that we have a very extreme drought building in center west Brazil and central Brazil. And that is big time corn country. And so we'll probably lose corn acres to soybeans if this goes on another 10 days. And the right side, the right map, is the 9-month drought severity in rank since 1981. And so if you get to that dark blood red rust color, you're talking about the driest, and if it's bright red, the second driest precipitation since 1981 when you look at all the way back. And so, I mean, we are talking about a historic drought that's forming in Brazil in the major areas for their corn production and their bean production. But again, I think that going back to the last crop year, Brazil's corn crop, I think, is shorter than what USDA is giving us versus the bean crop, which I think USDA is pretty close in production side, pretty close to where I'm at in terms of what they did last year. So this is a really critical map. And I'll throw this out to you too. If we have 10 more days of dry weather, and these forecasts are suggesting 10 more days of dry weather, and then we get out 10 days and you're looking at a forecast 10 days out of more dry weather, then you're talking about hitting the end of September and this drought worsening. And I think that's where the wheels kind of come off the bus when it comes to South America. And then that can bring China back in for even more corn, or another country in for more corn and more beans. And that's kind of the domino that needs to fall now. We need to watch our yields. We need to watch our cash basis because the crop's going to come on faster, but we got to watch this just as closely.
Well, and you mentioned maybe coming back to the U.S. And getting corn, beans, wheat, etc. We got a pretty big crop on our hands by all intents and purposes here. And as we look at some of the latest projections, walk us through this vegetative health map that you shared with us, and just as we kind of frame this up, getting ready for the onslaught of harvest here, Mike. It sounds like that all things are drying down quickly, and we're going to have a pretty bumper rapid harvest here in short order.
Yeah, this is where, how do you square the two circles? This map shows Illinois, Indiana, and Ohio in deep blue, meaning extremely healthy vegetation. And this is just, less than a week old. How does that match up? And this is the map compared with last year. How does that match up with the fact that we're seeing crop dry down in Illinois, Indiana, and Ohio at such a rapid pace? I mean, look at the maturity on the crop progress numbers from this past Tuesday from USDA, Jesse. We've got Illinois, it's running 24% mature in corn. It was 13% a year ago. Indiana's 12% versus 3. Indiana is 4 times more mature than it was a year ago, and I would argue that next week will even increase that difference in that extreme. And then you look at Kentucky, it was 50% mature versus 36. Missouri, 39 versus 27 last year. There's something going on here that I wonder if it's not going to really pull the corn yield down, and the market is not really ready for that. We just had a big analyst come out, a long-time analyst come out and give us a 182.5 corn yield, knowing that I'm right at 181 and a half, 182. I like that number, but I was just shocked at how much the corn has been drying down. And producer clients are texting me and calling me and saying, the second half of my crop that got planted in mid to late May or early to mid May, I'm losing bushels in corn right now. And this map does not show that.
Very interesting thoughts to consider. Let's go to livestock. I want to make sure we have a little time here for cattle, and let's pull up a October live cattle daily chart. Feels like we've gotten a little sideways here today, or Wednesday anyway, in the cattle trade. What's your perspective of what we're watching right now?
I agree. We're trying to find our way after the summer grilling season, and we've had some really bad U.S. economic data, bad Chinese economic data, and sprinkled in there has been some pretty good U.S. economic data. But July construction spending was down. We saw some unemployment jobs data that came out today on Wednesday for the month of July. It was over 1 million less than July of last year. It was the lowest job openings number since January of 2021. And I think with summer grilling season now past us, we're going to trade more of the economic fundamentals which relate to consumption. So this live cattle market shows my undervalue at 175.55, my overvalue at 190.50. USDA's got a steer price for Q3 at 190. I'm matching up nicely with them, and we've got a negotiated cash price at about 184 versus the now lead month October contract here of around 180. So we've got a lot of feeling out, as you say, that we're doing right now, Jesse. And I really don't think we're going to get much help from the feeders at this point either.
Well, speaking of feeders, let's pull up a feeder cattle corn ratio as well. Maybe some thoughts there as we see this corn market rally a little bit. Does that take some things off the table here about locking in some fall feed needs, et cetera? What's your thoughts there, Mike?
Yeah, I think the feed needs and fuel needs for the last part of 2024 are going to be something that I recommend here maybe by the end of this week, because the options I have and have had are pretty far out of the money, and we can really come in and get maybe some March corn calls in place. But you notice this feeder corn ratio, we've gone back below the February-March time period ratio of 65, 64%. Premium feeders versus corn, we're now back below that springtime low. If we close like that the month of September, that opens up the downside in the feeders in relation to the corn. I will say that the feeders have had a better price action so far this week than I thought they would. I'm not wanting to go ahead and put the lid on them. I'm going to give them until the end of this week. But what I don't like about this market right now, Jesse, is we're not retaining anything. We're continuing to push cattle into the slaughter, and we are starting to see quite a bit of price erosion in the feeder cattle market, and I don't see that ending anytime soon, at least not for this month. And so those feeders still look pretty weak just because of the supply side of the equation for the rest of this month. But I'll give it a few more days and see if the charts can't prove me wrong.
Well, sir, we take a week off and we find a lot of things we got to catch up on, no doubt, here as we put a bow on it today. A lot of great stuff, Mike. Final thoughts, anything you'd want to share with folks, reiterate to them here as they're taking a look at this market picture right now?
Yeah, we've got the USDA WASDE numbers coming out. The big numbers are going to be the soybean high. This is going to be September because they don't expire till the 13th. Not 1045, that's our August high. We've already gone through the August high in both wheat and corn, so now the July high is around 412. Those are the numbers to really be watching for as the September goes off the board and we have that WASDE report.
Mike, if folks want to reach out to you and get some advice and take a look at your analysis and more there at Global Commodity Analytics, how can they get in touch with you, sir?
Yeah, globalcomresearch.com, and it's globalcom with 2M's research.com. We do subscriptions, we do cash only, we do brokerage. So we try and do something that fits everybody's needs based upon size and how involved they want to be in their marketing.
Globalcom with 2M's research.com. Of course, that risk of trading futures and options can be substantial. With that, Mike Zuzolo, Global Commodity Analytics. Always good to talk with you, sir. Thanks for joining us. We'll talk to you again next week.
Thanks, Jesse. Nice to be back with you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.